Felix here, and I thought I'd give you a quick view of what the Côte d'Azur looks like. Look at that. But really what I want to talk to you about is next week. Is this bull market going to last, or is it going to turn around? I'll show you the background as well. Look at that. It's a beautiful, beautiful hotel. And well, I'm enjoying my dinner here. You know, I do a lot of trading, so a lot of the time we obviously think about, like, where's the market heading, what's happening here. Well, we've had these last 2 weeks, in a way 4 weeks, of just exuberance around lower inflation data. Now, why is it lower? It's because oil prices have fallen. Oil prices were at $110 in June, and now they're at like 90 something for July, and therefore you get lower inflation data. The sticky inflation in the market is still there. And on Wednesday, the FOMC minutes come out from the last meeting. Now, in a way, that's old data, but it's a big event. It's something to really watch out for. And likely, the Fed presidents were banging their fists on the table and shouting, "We shall squash inflation." And it'll be a reminder to the market that the Fed still has this mission and this mantra of getting inflation down to 2%. So depending on exactly how that's phrased, depending on what the dot plot looks like, you know, do some people want to go over 4% for interest rates by the end of the year? You heard Mary Daly saying she wants inflation to go to 3.9 by the end of the year and then to 4.4% by the end of 2023. That's not what the market's pricing in. The market is pricing in lower interest rates than that. So it'll be this kind of fight back, this conflict between what does the market believe and what's the Fed saying. But every time the Fed reminds us in writing of what they're doing, the market might well take a turn. At the same time, we're getting retail data in next week as well. So all of this combined will basically shape what the market's expecting during these lovely summer months. At least they're lovely here. So be a little cautious if you are an options trader or a position trader or anything like that. So what do? Well, what I did last week was I set up a lot of trades on Monday morning, and by Wednesday, by the time the inflation data came out, I'd closed about 80% of my positions because I like to avoid these hiccups. Now, if you're a long stock investor and you're just buying stocks for the next decade, then just look for the illogical major crashes that happen 2 or 3% down in a day and take those as buy opportunities. That's what I would say. So watch out for that. That's what's going to drive the market next week. It's basically Wednesday FOMC. So we might get a little bit of jitters going into that at the beginning of the week. So from me here in the Côte d'Azur, look at that. Look how far that drop is. Literally standing on the edge of a cliff. Have a happy week and have a beautiful weekend.